All right, good morning, guys. Let's go. All right, last night's session on the S&P 500 Nasdaq proved to be an absolute non-event. Once again, we continued to see really sideways action happening there, and really yesterday was the first time we've seen in quite some time that we've actually seen some sort of a dissemination between our market and what's happened in the States. I mean, we've also been drifting sideways on very low volatility and very little leadership for the better part of the month now. And then, yesterday we finally really got an outsized move to the upside, and it happened without the global indexes going with it. So it was really, it was quite interesting to see and quite wonderful actually just to finally see some action. All right, stocks, like we said, traded a bit sideways. Very little leadership out of the States, with Apple continuing its rally after its split. We had some good data. We continue to see a slew of just positive data out of the States. You had Jan Hatzius coming out yesterday from Goldman Sachs, the head economist at Goldman Sachs, saying that they are for the first time seeing the U.S. economy growing at above trend growth, and obviously that's a very big positive. We've been expecting that to happen for a long time now, and we're finally starting to see it. So, stocks continue to move higher on the back of that, and but elsewhere, obviously very little leadership. We've also had a bit of a mixed action, another night of mixed action in Asia, with Hang Seng and Shanghai really kind of lagging a little bit. Also, the Aussie market, but we did have the Nikkei and the Kospi up. So miners continue to struggle. We had miners under pressure in Australia. They continue to really be the laggard. With a 600-point rally in our market yesterday, I think we maybe only had one or two of the entire stocks in the mining sector in the green outside the golds, and that sector continues to suffer on the back of lowered expectations out of China. We did see some of the Hong Kong and Shanghai shares under pressure. China Mobile was down kind of sharply, but same sort of thing. Very little leadership, nothing really to take out of the Asian session, other maybe than just weakness out of the mining sector. Right, interesting little chart here, or series of charts. Really, all it's showing is the 10-year yields across some of the major countries in Europe, and it's quite incredible when you look at it. I mean, we're literally virtually at all-time lows in terms of the yields there, and it's coming at a time, obviously, where the economies there are under significant pressure, and with very high yields. So this is what we're seeing worldwide, and this is one of the reasons why it's been so hard to short equity markets for so long now. There's been very, very shallow pullbacks. There's been, every pullback has been needed to be bought, and I think this is really why. I mean, just globally, you're just looking at the cost of money it's so cheap, and when the cost of money is that cheap, you can't get yield out anywhere else. So the guys are having to go into things like the equity market, and obviously it's also boosting a lot of these economies. So just keep that in mind. I mean, that we're still in this cycle at the moment. Until we really start to see these yields starting to turn up, I think we're going to have to kind of stay in the mindset of buying pullbacks. All right, there's no there's no corporate action out today. Looking at the market data today, we've got South Korean unemployment rates, which came in a touch worse than expected. We had Japanese domestic CGPI numbers, which were a bit better. We have a bunch of data out of the UK later between jobless claims, weekly earnings, and unemployment rates. And then later in the States, we've got mortgage apps and the monthly budget statement, but nothing significant really to speak of on the market data front today. So we're going to have to go with the action again today, and with very little leadership in markets at the moment, we're going to have to continue to just follow the traffic. And I think yesterday we really got a real heads up here. Let's have a look at the maps, and we'll look at we started off yesterday by talking about the Aussie. And we talked about this range, and we made mention of the fact that, hey, we've been in a 400 odd point range, call it closer to 500 point range over the better part of the month, and you can see we talked about if we break above that 45,200 level, we're probably going to see it, that same sort of move to the height of the channel. Didn't necessarily expect to get it in one day, but that's exactly what we got. We got that move in a day, and I think, very significant here, very significant that we finally gotten some volatility. I think we're finally starting to get some of the shorts squeezed out of the market. And this is hopefully going to open some things up to the future over the next couple of weeks. What I'd like to really stress is to be absolutely careful over the next couple of weeks. There are apparently some very big strike levels out there, only 100 or 200 points north of this, which could obviously bring some real gamma into the market, some forced buying potentially that could come into the market, and just watch that very closely. We're getting close to closeout now. Closeout is a week from tomorrow, and things can get wild and crazy after we've seen things being so mundane and just unvolatile now for so many weeks that I think it's easy to see things moving and kind of thinking you're seeing an opportunity to kind of move it the other side. Just be careful of that. We could really see a protracted move, against, to the same direction over the or over the next couple of weeks. All right, let's look at ARI. ARI yesterday, one of those laggards that we talked about, really just trading very poorly. We had a 600-point up day or close to 600-point up day, and ARI really just dropped the bottom out of that flag pattern. Really looking classic here. I think we're probably going to test this sort of bottom end of this trading range somewhere between about 177 and 179 on the move out of that, and we continue to see the underperformance out of these iron ore stocks. If we look at Tiger Brands took out its recent high and that real spike up, and the last three sessions, and we've seen this thing move $16-17 to the upside, and we took that out. We are right at the peak of November, so I think we just want to see it take out 310. If we can take out 310, then we'll probably be able to continue some more of the upside from where we really broke out of this inverse head and shoulder pattern, which was, I think, very, very well defined, and really has a monster target here. We're talking about from down around 245, breaking around at 290. Look, $45 on the upside. We're looking at about 235 or 335 as a target, potentially on Tiger Brands on the breakout of that. So if we get above 310 today, we could be looking as high as 335 in Tiger Brands. ShopRite, don't laugh, it's not funny. ShopRite at 165. We dropped this support level here at 165, which we talked about and kind of talked about it looking quite head and shoulderish. In running that same target that we talked about just now with Tiger Brands, you're looking at the same sort of thing, the breakdown and the height of that the from the head to the neckline. We take it from, call it 176 down to 165. Dropping that, we're looking for a 10 to 11 rand target, which is exactly where we got to yesterday. You can see there just a shade below 155 was the low, and we saw a nice reversal off of that. So that was our target on the breakdown here. We've seen the target be reached. Yesterday we saw a little bit of a reversal off of that. I think if we are able to get above the highs from yesterday, I think it'll be bullish in ShopRite, and we could look at this thing as potentially reversing off of its target being reached, and really off of what I didn't look at this now, but I would assume is probably about the right sort of fib retracement here. Yeah, right into that level between 50 and 61%. So they definitely could see a nice bounce up in ShopRite potentially if the market keeps going, obviously, after it's reached its target now. All right, Naspers. We talked about Naspers yesterday. We talked about, I mentioned that this is my favorite setup in the market. Very bullish on this one. Luckily, this one, I can't click on anything here. There we go. All right. Luckily, this one played out. And we ripped above as of day before yesterday, we'd already ripped above this little flag pattern. Very symmetrical, breakout here of above the shoulder line of the head and shoulders. And then really the last little thing to look at was right there above that point of consolidation. I'm going to zoom this way forward here so you can have a look here. But really we had a bit of a gap down here from up close to $1,300 all the way down below 1250. And when we gap down like that, that was also where our right shoulder was. And the fact that we've gotten above that, I would say that we probably at least looking to gap fill up here closer to, call it 1285, 1287, somewhere up there in that region. I wouldn't be surprised to see us get up there rather quickly. And obviously this thing's moved $65 in 2 days. So, another $20 wouldn't be a surprise. We've got 10 cent up another 2%. So you got to expect a higher open out of Naspers again today. The weaker rand only going to support that. So Naspers looking very bullish. I really think this thing's going to take out its all-time highs sometime in the next couple months. So just keep this one close on your radar. The next one we'll look at is Sasol. Sasol is another one that we've been talking about. We'll back out a little bit here. We know that the 600 level is a major level. We've broken out above 600. We know that. We've been above 600 for a while, and we've been consolidating here above 600. Well, we as of the close yesterday, we closed above that little consolidation, only just so, but we still got above it. And I think that the stage is really set here for this thing to propel higher and really move to what our initial target was, which was about 30 rand to the upside and potentially as much as 40 rand to the upside, on the height of that channel. So we're going to be looking at 630 as a short-term target here, possibly all the way up to 640 in Sasol, especially if this thing can just push slightly above where yesterday's close was. And then the last one I want to have a look at here is Imperial. This one actually broke out. I should have shown it yesterday, but it's more clearly broken out now of this flag pattern. Definitely a bull flag here. Definitely looks like it can take out recent highs. Probably trade up closer to 215 over the next few sessions. And that's it for today, guys. Thanks a lot. Be careful out there ahead of closeout.